Hello, everybody. Brian here. Just wanted to show you basically gold ETFs, gold investments. Everyone's all about that. I wanted to show you I can use a bunch of custom scripts I've written in Python, and I'm going to show you the visual presentation of it and just basically the raw data. These are for ETFs. So you can see here right now, we're on let me just show you the daily chart here of let's say 3 month chart of GLD. It's kind of gone flat since April, so you're not getting a lot of performance. So the question is, why tie up your cash in this when you get performance better in better places? Namely, I'm starting to really find individual stocks as a place to go. They're hard to find, hard to time them, but let's focus on gold. So right now, gold GLD is pretty flat, right? So let me show you some of the stats that I'm able to generate, some of the reports. So this right here is all the ETFs available to you, all these different ones. I'm using now Interactive Brokers, been using them for about a year. So these are the ones that some of them are available on Interactive Brokers. So we got these ones right here. So the ones recommended in terms of optimal weighting for best performance moving forward, because we use a portfolio optimizer, is this one SGOL and this one OUNZ. And you can see here GLD is not recommended. So let's do a comparison and see how it's performing. All right, so we're going to take a look at, let me just keep this up actually. And here, these are your average returns as well. So the one that's giving you a positive return, SGOL, and this one as well, OUNZ. So some of the other ones may not be recommended because they don't show better profit, but this is typically what a lot of hedge funds will use. The script I'm using is similar to what hedge funds or ETF shops or any form of institutional level trading shop will do this to get what are the maximum returns based upon past performance, and then do a projection as I showed you here for portfolio optimization if they were only going to hold gold, and out of those batches, which is going to be the strongest. So here's GLDs, usually most people use. So let's take a look at SGOL and just see how it performs. So we're looking at Aberdeen Physical Gold Shares ETF. You can see right there a slight performance that's better. And the other one was OUNZ. So again, that's on an hourly basis. So let's do a 6 month. So SGOL. So they're fairly in line with each other. And the other one is OUNZ as well, the Van Merck Gold Trust. So they're fairly similar, as you can see here. But the next question comes down to which one's going to give you the better or lower commission, which one's going to give you more volatility or more liquidity, so on and so forth. But I just want to show you this. And another thing that needs to be really considered is actually not just everything's assumed in US dollar. So if you're using gold and let's say Japanese yen, you probably see the difference just here. It's getting this messed up. XAU, JPY. So this is usually a pretty good currency to hold gold in. You see the difference there. It's a little bit better depending upon your currency. So if you're going to trade like that, you want to hold gold in a stronger currency. So if you look at that's since the fall, this return, that's pretty good. But if you start to look at, let's say year to date, you can see that difference there. So now you boost it up to 4%. If you look at 1 year, same thing, 16%. And then if you go, 5 year, you can see that massive difference. So you're almost doubling your versus an ETF, to hold gold or just even a CFD, if it's legit, to hold it in a better performing currency. I just want to show you that because a lot of people may not know that. And again, numbers don't lie. This is live on TradingView. And you can pretty close to doubling your money, your capital, by holding it in Japanese yen versus anything in US dollar in an ETF. And you'll have less fees too. So lesson be learned. All right. Thanks for watching. Have a good day.